Hi, everybody, and welcome to Trader Talk Radio, the original show for this week. Today is the 11th of April 2021. Every time I say that, I can't believe what surprises me more. The fact that we're in April or the fact we're in 2021 already. Life, depending on your age, I think life does fly by pretty quickly as we go along. We'll bring up what appears to be a chart waiting for an update. Not quite sure why it's doing that. We'll need that, American. And I'll say welcome along. The team's going to come in and do 5-minute sections today on their topics. Those sections will be replayed, cut up and replayed later in the day and tomorrow morning, so you guys can come in and watch the whole lot together at this time. Get in the room. We will start doing a prize from next week for this as well. Or you can come in later in the evening and cut them up and watch the particular bits that are of interest to you. Frankly, when the team is talking, almost all of it is of interest to me. So I'm going to start off today. We're going to go to the macro view with Julian. Always a fascinating part of the show. Julian, what's going on in the macroeconomics world at the moment?
Hey, Paul, and welcome everybody, wherever you are in the world. So to another quick section on macro. Okay, so we're going to do a super quick scoop through. The next 2 weeks are going to be pretty important. Why are they going to be pretty important? Because it's reporting season in the States again. So the market moves from macro factors to micro factors. So what are Tesla's earnings? What are JP Morgan's earnings? Things like that right now become incredibly important rather than saying, should the S&P be at a new high? So we're going to do things like rotate within the market. So think about the way that you reframe that is the next couple of weeks or so, you start to think about those micro individual shares. Now, what does that mean for us? Because we're foreign exchange traders. It means that in all likelihood, the S&P, which has been rallying pretty hard over the course of the last few weeks, Paul, if you wouldn't mind sticking a S&P 500 chart up there, it's getting towards some of my price projections as well too, which there's some Tom DeMark price projections up at about 41.50 area, and we're very close to what they call a sequential setup, sell setup as well too. So I view that the stock market's going to be very interesting this week for two factors. Number one, I think it'll stop going up. Number two, I think there's going to be individual shares which are going to do incredibly well and some which are going to be absolutely trashed. So that's the stock market. As always with these things, the current themes of the themes du jour right now are inflation, and probably thinking about it, inflation. So what I mean by that is there's inflation coming, and it's now pretty much been priced in by the market, I think, as I'm going to put it in air quotes, the recovery trade. That's out there. Okay, so what do we then have to respond to? So what we have CPI coming out this week in the States, which is going to probably come out a little bit higher than people expect. Let's speculate that. But people already have pretty crazy expectations for where they think inflation's going to come in. I think the estimates are something like 1%, so to give us a 2.6% on the year in the States, right? That's going to sound like a lot compared to where it used to be, but 2.5% inflation doesn't sound like a lot to me. And I think the key thing about this is there's a global supply chain readjustment going on. So what has happened the last year is just about every single business in the entire planet, because of the COVID pandemic, has decided to run down every stock and every inventory collection they have. They're now trying to rebuild that, hence the reason why nobody who runs a business can get any product whatsoever if they're shipping it internationally. You just cannot find it, or get a ship, or get a container, or any of the above. Okay, so you're struggling, you'd like to sell more, but you just can't at the moment because you've already sold everything that you have, right? So bear that in mind. We've probably got about another 6 or 8 months to go with that. And then I think the story for next year is going to be everybody's going to be overstocked because suddenly the demand might fall away, but we'll talk about that another day. The key thing for me is, one other key theme for me is interest rates at the moment. I'm going to just grab the screen for 2 seconds, Paul, and stick this up. This is a chart I'd like to share with the group today. I hope everybody can see that. This is a chart of the gold price, which is in purple, versus the interest rates, long-term interest rates, which is the 30-year interest rate. Now, what you can see is where the gold price topped out at was pretty much where interest rates bottomed out at, 30-year rate bottoming out about 1.2%, and gold, as we know, topping out over 2,100, I think it was. And then it began its great big correction. Interestingly, it began that correction as interest rates have been rising. Now, what you've seen over the course of the last 3 weeks is that rise in long-term interest rates stabilizing. So what does this mean? This is some of the reason why those foreign exchange trends out there, right? And think about this, right? It's the interest differential, but it's not. It's the rate of changes of interest differential that the markets look at, okay, for thinking about how they view currency pairs. So that has implications for us. And when we see these interest rates starting to stabilize here, that those spreads could start to compress, that means the dollar will probably, US dollar will probably fall away a little bit over the course of the next few weeks if interest rates come down. So my call at the moment is I'm seeing probably a short-term top in these interest rates. I suspect they're going to come down a little bit. Wind that into something happening in asset markets, maybe. Even a stabilization of stock markets, I think, would cause interest rates to become more attractive. So people will move back into bonds because it's a better place to be. And also, for the record, back into gold. Now, Ainslie is probably going to talk more about that. We're at a pretty key junction, I think, in gold. Whoever you talk to, somewhere between 1730 and 1780 is pretty significant. Really key thing. Is the gold market going to start the next leg up, or is it just a retracement of the bear trend? Ainslie, I'm sure, will fill us all in on that. I want to leave this thought with you, though. That correlation and that and the way in which gold falls as interest rates rises, if interest rates start to fall, then what do you think is going to happen to gold following that principle? Now, normally with rising inflation, you tend to have rising interest rates. So this is our challenge now. Okay, we have to be conscious that if interest rates do continue up, then I think some of these commodities will continue to struggle, as will stocks. But if interest rates start to fall, then we're going to see a different set of patterns unfolding. So I prefer, if the interest rates are falling, you prefer NASDAQ versus the recovery stocks. And also you're looking at some of the precious metals versus perhaps some of those other commodities that have been doing very well recently. Paul, that's it for me. I could talk for ages. That's the quick wrap up.
Thank you, Julian. Got to say, I could listen to you talk for ages as well. Loved the interview with Geoff today. I thought it was really good. To hope that we have more people watching that every fortnight, right? You're in with Trader Cafe, and next week you are doing...
Next week we are doing a first for me. We are doing an open forum. It's Ask Julian Anything. So anybody that's listening out there, this is how, I think this is the one that we've got scheduled for next week, Paul. This is the first time. So this is not the me talking to the trader coaches. This is not me talking to individual people. I'm talking to you folks out there. All right. So this is an opportunity for you to ask me anything about trading. If you're willing to share your problems, your anxieties, your thoughts about the world, let's talk about it. Let's wrap. We got half an hour to do it. I'm really excited about this.
And each week there's either a chance in your show to win the market, the broadcast group with the trade calls. Got a great video feedback on those. What are you doing with your trade calls? My gosh, got a guy on video saying you're off the wall with them at the moment, mate.
I'll take the positives out of that. I hope the positives ones are in there. I've been a little quiet recently, the last week or so, because I'm trying to find something worthwhile to tell everybody about. But I think things are about to change. So watch out for those calls. Love natural gas and probably hate stocks. So that's where I'm heading at the moment.
I reckon you're well above your normal 60% success rate at the moment, mate. I reckon last couple of months you've been up around 70, 80. It's just I got a video from a guy who's wrapped. He's basically making a living off following your trade calls right now. Always good to see, mate. Okay, we will see you next week on the open talkback, the open chat with anyone that wants to have a chat with you about trading. At that'll be at 4:30. Oh, I've got a 4:30 sing for that. 4:45 sing for that, as I recall it coming into this 5:30 show. Cheers, mate. We're going to go to Alexis now. We're going to go from a macro overview, and it's fascinating to hear. We're going to get into fundamentals. Lexi, last week we did the correlation between the Aussie and the Chinese renminbi. What do you got for us this week?
Well, I think the major, I think very similar to today, we still are looking at the whole, are we going to increase interest rates? Are we not going to?
Lexi, you're very faint.
What is this? Testing. All right. I think this should be better. Yeah. Okay. So I think we are still looking at interest rates and whether or not it will be due to heat up. So there is still news on it. And again, the talk is will the US increase its interest rates and when? And if you're looking at inflation rates being higher and there's a commitment to achieving a more inclusive labor market. And on the bond market, we also have seen the government bonds whipsawing in tandem with changes in expectation about the Fed's timing. So the Treasury yields, and traditionally Treasury yields, they rise as prices fall. They've actually shot higher since the start of the year as investors are coming to grips with the potential strength of the economic rebound and, of course, the subsequent implications for the central bank. So a bit of focus on interest rates. It's pretty curious. And if we do a quick look at where the unemployment rates, I think about 2 weeks back, I spoke about the unemployment rates and the correlation of which is the area where unemployment goes, and then interest rates might pop up. So we are again 6%. The latest stat was 6%. So I am thinking that the moment the unemployment rate dips to below 5.8, I think the interest rate hike might come nearer. So I think a lot of eyes will be actually on the unemployment rates to see whether it does match up the interest rates expectation or not. On the other side of things, the last week we looked at the CNY, the renminbi, and the Aussie dollar, and the correlation. So it really is interesting in a little bit of a way. You see this article over here. This was posted on the April 9th. So this should be interesting to see where it's coming up, because as the dollar recedes, the market is still very bullish on the Chinese economy, and of course the Aussie sensitive, the Aussie dollar is pretty sensitive to the renminbi movement, and China is the first major economy to have kind of fully recouped the lost output from the pandemic slump, and the annual growth is actually exploding higher in the first quarter due to last year's low base rate effect. So basically, due to the first quarter COVID, right? They do a comparison on statistics, and it does seem that there's an explosion of numbers, but also this distortion actually pushed China's growth rate to double digits for the first time in a decade. So it's actually a maths issue where, because of COVID last year, the first quarter, they compare it to this quarter. Of course, they will look at that explosive recovery. But the market sentiment is what I want to focus on. And the market sentiment is likely to receive quite a notable boost because China's growth indicators are still strong. And if the actual numbers match up with the actual strength, then this would be a very good news for China-sensitive Aussie dollar. So in short, what I am looking forward to is the potential Aussie strength coming back into the market. And if we look at the comparison on I think just the CNY, this is the renminbi against the USD. This is on the daily time frame. What I'm pretty much curious about is when it will happen. So I'm wondering whether or not next week will give us our first higher low over here, right? So if price doesn't manage to break below this area, then I am expecting Aussie bullishness because of the correlation of the Aussie dollar and the Chinese yuan. And you can see there is, if we go down to the 4-hour time frame just to see the statistics, see the momentum, I would say. You can see on the 4-hour time frame, we already have that first higher low over there, and candles look like a potential reversal in that sense. So when we compare the two charts side by side, what interests me is there is a slowdown in the drop of the CNY, the renminbi against the USD, and I'm wondering whether or not in terms of the Aussie dollar, will we see a similar halt or pause in the market as the markets try to figure out where to go next, and if all things stay true to the correlated Aussie versus the renminbi, then I'm looking at a potential long opportunity over here. So I think my eyes are on Monday and Tuesday to see what the RMB does on the Monday and Tuesday, and whether or not we could take advantage of this as a hint to the Aussie dollar finding a support level on this level. So let me just erase this, and let me use a Aussie dollar pair instead. It might be a little bit neater. So the Aussie dollar, you can see the consolidation happening over here. And if you just look at the chart pattern, you can see it very, very similar consolidation, very similar consolidation happening. So really interested to see whether or not if China can get this motion, whether or not we can get the same in the Aussie, and allow whether Aussie actually allows China to pull it back up. Yeah. So my focus is still on the Aussie dollar next week, and I'm looking for opportunities to long the Aussie based on China's recovery. That's all I have for this week.
Cheers, Lexi. Thank you very much for that. Fascinating as ever. So we've talked fundamentals, we've talked about macro markets, and next time we're going to look at the data, which could give us a chance to drive direction in the market this week. How's the data look, Ash?
Oh, I've just been having a decent look through, and what I find is probably the most interesting is the lack of specifics when you get to really the extreme. So with the COT data, we really want to see it at the extreme levels to kind of get more comfortable with whether we should be more confident about buying a certain instrument or selling a certain instrument. But none of them are really at the extreme. The most interesting is the yen. And the yen is the most interesting because this green line here is the index of the commercial traders. And as it pops up here, it's showing us the strength of the buying. And that is probably, when we look back historically, this is probably giving us quite an extreme signal, even though it's not at a very, very high level. We'd want it kind of like nearer the 100 zone, if you like. It's currently sitting at 73. So anything over 80 is suggesting that something, in a kind of buy area. Hasn't got to that area yet, but it has popped up quite significantly here. I think it's interesting that Jules is talking about the potential weakness in the stock market after we see some of those earnings releases come out, because then people may well start to go to more safe haven assets, and the yen looks at this period anyway to be one that people could get to. If we look down here, then this actually shows us how the index is calculated. So we can see that the selling has come off, rather than this red line here is showing us that the selling is starting to subside in the yen, even though the buying hasn't really shot up. So it's more that people are coming out of their short positions with the yen, and this does show us the chart. It's not an MT4, but this does show us that the chart. And if you look along right to 2019, you can see that we are in this support area here, and this is the low in the yen that we saw during the pandemic. So I'm looking at potential yen to the upside, so looking at some yen strength. But I think it's more interesting this week to maybe focus on some of the seasonals, because if we just have a quick scroll through, the Aussie is suggesting that we are probably near or at a peak, and it is likely to be falling into around about the end of May. And I'll whip through these relatively quickly. The pound looks like it could have a bit of a rally, but it's not strong enough to be significant. So I'm not sure whether I'd want to kind of put anything on the pound. So at the minute, the Aussie is winning as a signal for some downside. Canadian dollar looks like we do see some strength as well, and it looks like that strength may well continue right up until September. So that looks like a stronger signal. The euro is relatively flat, and it's important to talk about these, even though they're not showing us an extreme level. When we see that this kind of thing with the seasonals and the COT data, I can tell you would suggest something similar where it's fairly flat. It would kind of say if you're in a trade in a direction with the euro and you are finding that you are getting a trending market, which this would suggest that there may not be one, stick with it and just get those stops at levels just in case things do drastically change. But it looks quite gentle. Now, if we look at the yen, again, we just looked at the COT data with the yen, and look at the yen, how the yen can pop to the upside here. It can sort of it looks like we may well be carving out the lowest points here after a dip. Yes, it dips again in June, but really we could be on a pretty good run with the yen, with some dips and an expansion right the way up to the middle of October. So the yen is probably the most interesting. The Swissy as well, relatively flat. And just finally, I'm just going to bring you with currencies. I'm going to bring the dollar, because the dollar also looks like it could be going into a bit of a weak period seasonally as well. So dollar yen looks like a candidate. I didn't look at the Kiwi, but the Kiwi as well would follow what's happening with Australia, where it looks kind of weak. So Kiwi yen short, Aussie yen short, dollar yen short as well. So it looks like the yen may well be one to focus on. Gold now, because we've been talking about gold, I want to have a quick look at gold because I've got a slightly different opinion on gold. I think gold down to 1560, 1570 is achievable, and I'm quite keen to see that happen. Let's have a quick look at the COT data. COT data, the index has popped up to around about this 50 line, completely non-committal. That is not suggesting a rally in gold from the significant low point, to be honest, at the 1680 level. Of course, they're always selling. The selling's dipped down a little bit, but it's not particularly significant. When we see it down here, this is when we see the real rally happen with gold. So not suggesting a rally in accordance to the selling data. The buying data is quite flat. And then if we bring in the seasonal aspect of gold, then what we have, make sure I don't bring up the wrong one. There we go. There's seasonals there. Look at this, flat right the way through. You know, a few kind of like moves to the upside, but nothing really significant right the way through to the middle of June. So I'm really kind of focusing on the potential for gold to come down to, as I say, around about the 1550 level. And just very, very quickly, I'll show you the chart. Look at this area of potential resistance here. Looks like we could be getting to that point and then popping back down again. And the reason I like the 1550 is because of this relatively strong line here, and it goes back historically. So you can look at between 1550 and 1500. So I'm looking for further downside with gold. Not that I'd want to trade it, but it means that I wouldn't want to go long currently. And that's pretty much what I've got.
Cheers, Ash. Thanks for that. We'll be getting some interesting. We'll be moving on with gold. We'll get Ainslie's views next on gold. Be interesting to see whether she agrees. Ainsley, what are your views on gold for the week ahead? Thank you, Ash.
No problem.
Thanks, Ash. Aha, gold. Now that's been an interesting week, hasn't it? We have certainly had an interesting week. Let's have a look. Let me pull up this chart here. Let's go back to this box that we've been talking about continually for, I don't know, a couple of months now, because all we have here is we've got a double bottom that gold formed, bounced off almost in a textbook fashion, came up and into the box. And at the beginning, I think it was last Sunday, we were talking about, okay, it finished, it was at the top of the box, what's it going to do? We had a breakout, and when I had the breakout, I was really, really suspicious of the movement on it, the nature of that move, and then it stalled. And it was, you know, look, as everybody knows who follows this show, I'm waiting for it to do something, go somewhere, do something. But I've got to say, I was watching it intently, and I had the time to watch it because I had my daughters at the Sydney Royal Easter Show, and they were having their stomachs thrown around on several rides. And I was watching, and I'm just thinking, this is not going any higher. I brought it down to a 1 hourly chart, and it's like, I think I posted on our broadcast group, just wait. We've got to wait. We've got to see if this is a false breakout. And sure enough, it came back down, straight back into the middle of the box, had a little look around. I'll drop it down to an hourly chart. And if anybody knows how I trade, I really don't like to get down to this area. So it was stalling. This is where I was at the Easter show. We were stalling here, and then down she came. 9 a.m. New York time. There we go. The yields eased. Gold popped, only for a short period of time. And then look where we finished. We've finished on the top of the box again. So being careful and not getting excited about a market that is not trending and just sitting and being patient is going to make sure you keep your money in your back pocket. It's going to preserve your capital. I know we all like to jump on something that's moving. However, that opportunity was not there. It's been quite delicate with how it's been moving, and we've been following this box in hope that it'll actually go somewhere. We've had nowhere to go. Furthermore, on a daily basis, and I'll just open that up a bit more so you can see that a little clearer, is we came straight up and clipped the 50 moving average. And with gold, we've talked continually about how gold likes levels, and gold clipped the 50 EMA, and that also, it came straight back down, hit the 100 on the 4-hourly chart. It hit the 100 moving EMA, 100 moving average there, exponential moving average, and bounced. But that was also in line with the fundamental side, to which it's being sensitive, of the yields rate, bond yields rate easing. Sorry, that's a mouthful there. Where we go to next, that's where we've been, that's where we're at. Where to next? I have to wait. I'm looking at, if you go to my weekly chart with this massive bull flag that has given me a double bottom, it's given me a bounce. Do we get up that high? I don't know at the moment. I do not know. There are so many cogs in the wheel at the moment with interest rate, inflation. Do we go down, as Ash suggested, do we go to 1550? Personally, I don't think so. Where we're at the moment is something that's been static, and it's holding its balance through quite a bit that's going on with the US dollar. Okay, so everything that's happened in the US dollar, with the US dollar, we're static. We're static in this ridiculous box, and we just haven't gone very far out of it in either direction, have we? So we're back here. What do? We need more information. Is that a trend? No, it's certainly not. We're ranging. I'm not a range trader. I'm holding on for dear life as far as being patient and just waiting to see which market it goes, in which direction this market goes, because we all love a good trend. And I'm the first one to say I love to get on a trend, scale in and leverage it up to the eyeballs. But at the moment, I cannot do that. Haven't been able to do it for some months, and it's just the way trading goes sometimes, guys. So really sorry, I haven't got anything fantastic to say. For this, I just need to wait. I need more information. What is going to happen with the US dollar? Is it going to come off? Is it only going to come for a short period of time? Are the yields rates going to increase, or are they going to wobble and come back down again? Is the inflation story going to, the packages that are being presented to getting the economies going post-pandemic, so much information that you need to build into. And is the money going into a traditional safe haven such as gold, or is it going somewhere else? I've got so many things that we need to process to be able to get really good traction, not just commercial. I need to understand what is happening with the fundamentals behind it at the moment, and that's gold at the moment. It's not giving me anything to go on. Thanks, Paul.
Thanks, Ainslie. Thank you very much for that. Let's thank you for the gold. We'll have back to you in a few minutes to talk oil. But for now, let's talk to Shukri about crypto. Shukri, what's going on in the crypto world? What's Bitcoin at the moment, mate? Do you know?
Coinbase listing 14th. So I'll show you, but there's another event on the 14th. I'll remind again because some might have forgotten. So, okay, so let's look at Bitcoin again. Again, starting to challenge the all-time highs again. But this is what Bitcoin does, guys. Bitcoin loves to do this. Look, it was coolly defending this. It slipped below and then slipped up again, blowing away 850 million. It likes to blow out accounts. It likes to liquidate accounts. So this is another gotcha, right? And then it's now challenging this. If it breaks the all-time high here, this will go to 73. But the most important thing is Ethereum here. Ethereum has broken the all-time high. Now, I am buying this, but here's the deal. I am not trading this. There's a lot of news on Ethereum that is going to be used as the main, the technology and all this is going to go to 10,000. And if it does, and if I believe it, why would I want to trade it? And my main reason here is a girl named Beth. And this is very important. If I buy Ethereum for staking, what I would do is just dollar cost average down or up. I will stake it in something like Binance. I will get BETH. BETH represents that Ethereum, and I can trade BETH within that ecosystem. I can get rewards within that ecosystem. So it's as if my Ethereum didn't go anywhere. And I think that's a good deal, because this, Paul, this takes me out of the issue of going out and then having to go back in again, right? I'm like, okay, I'm just going to ride this thing. The next thing is, I'm going to tell you guys, can you guys be careful when you see BETH? Because if you go to Huobi, you can't do this. You got to do this in Binance. So, you got to do your research. But it's a great way for me to just hold on to the position while not losing my capital. And I can protect it if I want to also.
Let me see if I've got this straight,
Yes.
Rookie. I was taken away for a second there, but you're going to buy Ethereum
Yes.
and you're going to stake it? What does that mean?
I'm going to stake it. I'm going to keep it in a vault. It's in Binance. I'm going to earn interest for it. If I'm not mistaken, it's 8% per annum. Okay, so that's done. Let me draw here. Okay, get it right. This is a good question. You guys really need to understand this because it's something new. It's like DeFi 2.0. So here's my Ethereum here, right?
Yep.
It's gone. It's in a lock now. I can't touch it. That's it. Yep. It's gone for about 2 years.
I'm getting 8% for that, right?
8% for that. Now in Binance and not in Huobi.
Can I lose it? I can't lose it on.
No. It's there. It's
it's worth whatever. It's not worth a set amount in there. It's worth what the value of Ethereum is.
Yes, at that time.
Ethereum goes up, I make money. For the value of Ethereum, I lose money.
Yes.
But either way, I get 8%, right?
Correct. Now here's the thing. 8% per year. Now here's the thing. This is important. Once you stake it there, you get something called BETH. It's the same as this. But I can use the BETH again to trade within Binance. I can do that. I can change it to real.
So this is like B-grade Ethereum.
Yes.
B-grade Ethereum, right? It's B-grade. So there's Ethereum. I've got a stake that's locked over here.
Yes.
So they give me kind of credit or B-grade Ethereum, which I can still use. So
yes.
I'm getting 8%. Plus, I can still use my Ethereum to trade.
Yes, and you can stake things in Binance and get rewards. Also, you can do whatever you want. I think this is cool. This is great. Yep. Because this makes it simple for people like us, Paul, because the people who are clever, they got this locked and that's it, because they were very clever. Now Binance is good because they call for, hey, we don't know how, we can't set up a machine. We don't know how to do this. So Binance said, okay, if you stake it, I'm going to give you BETH and you can do whatever you want within the Binance ecosystem. And Paul, this is what's happening. Last week we saw the same thing with Kusama.
1 Ethereum equals 1 BETH?
It's about the same. It's like 0.8, 0.9. Yeah.
So I put my $1,000 into Binance.
Yes.
I lock it away in a vault.
Yes.
And they give me $80 a year for
okay.
8%.
Okay. One moment for that. Let me draw this. Let me draw this, Paul. Okay, you put $1,000 here, right? Okay, this is easy. Whatever currency, New Zealand or Aussie, it doesn't matter because with Binance you can bring it down. You can stake very low. Okay, so you get like 8% per year, right? So this is gone, finished. You can't touch it. But in return, you will get like something called, what do you call this? Okay, say you stay in New Zealand, D this, and then you get BNZD. This is not the same. This is about $900.
Yeah.
Okay. Now you can't use this in Australia. You can't go to Ainslie and buy dinner for her with this. It's not going to work.
$900 can cover dinner for Ainslie, to be honest.
It's a very expensive exercise.
you can only use this within Binance. It's like only that. Right. And for here, you can buy other tokens also. You can even stake this thing again, BNZD here, and get other things. It's up to you. So it's like this didn't go anywhere. It's still there.
Let me ask you a question, Shoki, because this looks too good to be true. Can it fall over, or is it secure?
Is it secure? It's secure. And if you see that, what's happening now? Now, I like why Binance is doing this, because look, the DeFi hub is Akala. That's from your country, Paul. That's not good news, okay? That's not good for you, okay? Because for us, we can buy Akala. I'm sorry, Paul, you can't. Okay. Now, good. Thank you to the Kiwis. Now, look, Akala is doing the same thing. They're saying, if you put your Kusama here, we're going to give you El Kusama, and you can trade on an exchange here. This can be capital for your exchange. It doesn't go anywhere.
Okay, I sort of got it. It sort of makes sense to me from a banking point of view, because what they're really saying is like the bank, right? If we've got $1,000 of your money, we'll lend you $1,000.
Yes, correct.
You know, we've got security over here, so therefore we can lend you this money to do this. We'll pay you a little bit over here. The difference here is that you don't have the bank saying, well, we'll pay you 8% and charge you 15.
Correct.
This is, you can go over here and answer the money, but this is the security. If Ethereum crashes, well, you take your medicine, don't you?
Well, if you can hedge this out here with this guy, right? You can do that too. You can short this position here on an exchange. But I don't know what you want to do that, but that's possible. But Ash would probably want to do that because he likes hedging, right? So that's cool.
And
it's up to you.
I've got to keep going, mate, because we've got lots of guys waiting. Cool. This is, what else? Something else you got to remind us. 2 more minutes to wind her up, Shukri.
Yeah. Okay, so I'm just accumulating Ethereum. That's it.
You're accumulating Ethereum. Nice. Now, Crypto Saturn's underway for the long-term regulars. That small group, they're going to work together. Crypto Moon guys are doing some stuff, and we'll have a chat. We're going to start and do a bit of a new crypto stuff in a couple of weeks when you've had a bit of a break, right? It's pretty full on.
Yeah, but it's good, guys. This is back to 2017. The big blockchains are coming back, so it's good because there's new things now.
That's fascinating, because I didn't even know there was more than one blockchain, but that is that is cool, Shukri. Thank you, mate. I learn something every time I listen to you. Thank you for that. Ainsley, let's talk oil. What's your thoughts on oil?
Do you know, I really hate bookending, Shukri. Just a personal thing. Let's have a look at it. Let's have a look at oil. Hello. We've gone nowhere. Absolutely nowhere. Now, I've done some fairly extensive research into seasonality on oil and just tracking to see if there's something that can give me a heads up here on oil at the moment, because apart from looking like another gold chart, which is really not very helpful, by the way, we've got this horrible consolidation box that's been going on since the 18th of March. 18th of March, I know it's getting boring, and I'm really, really sorry, everyone, because I'd love to tell you something else. But as you can see, we're getting tighter and tighter and tighter with consolidation, by the way. So look, one thing is that it's going in this direction. The arrows, by the way, let me just go through the arrows on the daily. I've done a bit of research on quite a few seasonal charts, and seasonal charts will from different sources will give you slightly different information. And if you put certain filters on them, for example, post-election or whatever, midterm, coming into election, that it will give you some more information. I've gone back 53 years. So this, where I've got the arrows, I'm following a 53-year chart, seasonal chart, no filters on oil. It starts the year with a run in January, and then a period of consolidation, and then goes for a run for a rally, as you can see here, during February, which is what we had, popped straight out of the box and didn't look back, and away she went. There is a double top, and I'll just pull that down a bit. It measures up exactly with a monthly resistance level. Didn't break it, didn't close above it, sorry. It broke it, didn't want to know about it, came back. And there's a double top on the seasonal chart that I was looking at that went go back. We had 2 arrows down, and then we had the fall off, and then it had a period of consolidation. Now, that period of consolidation, it'll be interesting to see, because it's got a long way, it's got a bit of a fair way to travel before it actually breaks out in either direction. But what we've got there is the next date, and these dates scarily line up quite nicely, actually, which is quite surprising. You have biases, and you talk about it's not an exact science and all the rest of it, but the timing on that on the seasonal chart with the daily chart for oil currently, from the beginning of the year to where we are now, is unnervingly accurate. My next date is the 20th of April. So we'll talk about to see how things have transformed. We're talking about a bit of a flick up towards the end of this week, but then we're talking about a drop off going into next week. So don't get carried away with a false breakout. If you see one towards the end of this week, I'll be monitoring that. But at the moment, we're still going sideways. I've got nothing to give you, unfortunately, guys, on oil. We're just playing the waiting game. So for somebody whose natural disposition is not the most patient, I'm being tested in all directions. 1, it's school holidays, and I've got 2 teenage girls at home. 2, gold's not going anywhere, and 3, oil's not going anywhere. I deserve a medal, I think, at the moment, but that's life in the fast lane, Paul. That's all I've got. Sorry.
Ainsley, let me tell you a twist. This will
give me a twist that Paul's going to come over to Australia and take me out for an expensive dinner. I'll find the restaurant.
In the future,
Sydney this weekend in May, Ainsley.
In the future, you know that state ETH that I was telling Paul just now? It can be used to even buy gold and oil. An Australian company has already done it. It's called Synthetics. So I'm sure that one day, I'm sure that Paul will get a deal with us on Akala, right, Paul? Thanks.
Oh, one day I'll understand what all these words mean.
I'm waiting.
Let's get,
I need that video, Shukri, by the way. Yeah, so that's where we are with oil and gold. It's still there, but you know, gold, just a quick summary. We're waiting to see what happens with the next move with gold. Gold's being impacted by so many different aspects at the moment. We just need to see. But look at oil, for God's sake. I'm just like, but patience is a virtue, because we all know that when it does get on the roll, it moves. And we've seen it move, and we're also coming up, I think it's this week or the beginning of next week. I think it's the end of this week. It's 12 months since the huge major dip. And if you're looking, there we go. There's where oil fell off the chart and went to zero. That's 12 months ago to coming up this week. So let's see how the markets react to that piece of nostalgia. Probably
Cheers,
not.
Ainsley. Thanks for that. We'll watch with interest. Got to say, I've been long oil for a while, and I can't say I find any of this to be the least bit concerning. We're going to sit in the long oil and see how it unfolds. We are going to talk. Lloyd, are you in the room? I couldn't see you on the list. Lloyd, are you with us?
Yeah, Paul, I'm here.
Hey, buddy, you're under Actions to Wealth, aren't you? Hey, that's why I couldn't see you.
Sorry.
We're going to talk about currency strength index, currency strength matrix. This is where we take, instead of just the dollar index, each country has an index, see what it's doing, and see how we can trade it in the week ahead. Over to Lloyd to talk currency strength index now.
All right, let me grab the screens. All right, so let me have a small update about last week trade setup. So I actually had 2 trades last week. Cat Swiss, let us have a look. So this what happened. I actually traded Cat Swiss. It did have a price action bounce off the level. Unfortunately, it took me in, and then straight away it took me out within the next 2 candles. Yeah, so I suffered a loss on this. Slightly better on the next trade, which is dollar yen. Yeah, so it did price actually on the 4-hour chart. It did break through, had a retest of the box, and then I actually traded the bearish candle. It took me in, had a TP1 and it retraced. Yeah, I'm still interested in actually maybe I may be putting a discretionary short on this. Actually depends on Monday. Yeah. So what I really like to see for this is if dollar is actually falling, then I want to see price actually do this, retest this level and go down. Yeah, this is what I would want to see. But as I mentioned, this would be a discretionary setup. And let me clarify my position. Why is it so? Now, for the currency index for this week, I'm still bullish about CAD, although it's near at 18 level. The thing is that if you look at the past, it actually went through 80 before. Yeah. So, and from last week and the week before, you can see that the price actually is actually still pretty bullish. Yeah. So I'm still, with regards to that, oil seems to be rallying for now. I haven't really looked at oil charts, right? But at least from the currency indices point of view, or my point of view, it seems to be bullish. Yeah. So it's pretty. Gonna long on that. Now next is Kiwi. Now this we gotta be careful about this. Let me see. So I think last week and 2 weeks back, I was actually pretty bearish about Kiwi. They have broke the level, very strong level. Now it actually bounced off 70. You can see from last week and the week before, that's the position they have pinned, and it did not close below. So my next suspicion is that it might put in a higher low. So with regards to that, price might actually travel a bit up and then it breaks below. And this presents us a very unique opportunity that we can actually go on long on this, and we can grab our TP1 fast enough. Who knows? I'm prepared to leave my position on and see if price actually breaks upwards. Yeah. Now DXY, now the dollar index is a bit confusing for me for this week. I've got to admit that when price broke up, it didn't stay above for a very long time. Now it's been retesting a short-term horizontal level for me. Yeah. So this coming Monday, let's have a look at the daily chart. Now, if price actually closes below 92, then I'll be pretty bearish about it. But if it manages to bounce off this, now we've got to be reading this. Price essentially on the daily chart is still on an uptrend. This is still a higher low to me. Yeah. So this presents a horizontal level that I'm hoping that price will bounce up. Simple as that. If it does not, then I'm prepared to actually trade it low, all the way back to $90. Yeah. So this, because when we look at the weekly chart on a larger time frame, DXY is still on a downtrend. Simple as that. On the daily chart, it does give us an opportunity to go long. Yeah. So I'm prepared to take advantage of either side, just pending price action behavior on the horizontal level. That's about it. Aussie, still ranging, really not interested on it. Now, pound, bearish. Yeah, you can see that price has a pause break, retest, and then break below this consolidation. Yeah. So I'm prepared to actually trade pound. Let's have a look at the daily charts, all the way down to about 134, 135. Yeah, so that will be an interesting ride to me. Now, for those of you who are much more conservative, you can actually wait for pound to actually break this horizontal level, just in case that it doesn't form a double bottom. Yeah, so what you really want to see is for pound to break, retest, so that you can actually trade low. Yeah, this is for more for the conservative traders. Right. Now, euro on a weekly chart. I'm still waiting for price to actually retest 120. Once it's done that, it might be a shy of 120. Basically, I'm just waiting for a lower high, and then I'm prepared to actually trade this low. Yeah, you can see this is so far pretty consistent. This is the peak, lower high, and then lower high. I'm just pending a price action to confirm, and then I will be trading this short. Yen and Swiss currently both, I'm still bearish on both of them. Yeah, no surprises here that actually price finally had a retracement. Yeah, it's been long overdue. Yeah, so I'm just waiting for price on Monday to see how it actually interacts with here, this horizontal level. Same with Swiss. Yeah, so once the interaction is done, let's say on the daily chart, if this is really much more, I would say, deeper retracement, then we can actually trade price back to here. Yeah, if it does not, then I'm just waiting for price to actually free fall. Overall, my sentiments for yen and Swiss, I'm still bearish on that. Now, as for the setup for this week, what I have is actually, let me have a look at dollar Swiss. The 4-hour chart. Yeah. So on the 4-hour chart, dollar Swiss for me is a downtrend already. Now price has reached a strong horizontal level. I'm simply just waiting for price to break, retest, and I'm prepared to go short. Next pair that I'm prepared to trade is actually pound CAD. Yeah. So from the currency indices, I'm bearish on pound. Against very nice level for me to trade from. Waiting for price has in fact break. I'm just waiting for some sort of retest, and then I'm prepared to trade these shots. Yeah. So these are the two swing setup. I'm prepared to trade next week. That's all, Paul.
Cheers, Lloyd. Thank you very much for that. Always interesting to see what you've got. Now it's time for the technician's 2 cents worth. We're going to listen to Geoff, fresh off his interview with Julian earlier, having a look at these charts and seeing how we stand technically for the week ahead. Julian, the technician. Sorry, Geoff, the technician's 2 cents. You ready to go, buddy?
G'day, mate. Yeah, hot to trot. Absolutely. Let's share what we can see. A couple of things. First up, I'm going to talk about pound Kiwi. Now, pound Kiwi is probably my favourite pair for the last, 6 months or something like that, because, and the reason is simple. It's been trading beautifully technically, and last week was a case in point where we peeled off the top of this beautiful formation, which of course is an ascending channel, and came back to the bottom, to the pip, absolutely perfectly. We managed to take advantage of that. And now, of course, we're looking to go in the opposite direction. Why? Well, two reasons. We're at a beautiful support level, not least because it's a horizontal level, but also because it's the bottom of the ascending channel. Now, if you cast your mind back some time, and I know we're going back some time, but we saw this on this show, I'm pretty sure. If it wasn't on this show, it was certainly, no, it would have been on this show because we have lots of shows, obviously, through the week. But we saw this this tweezer bottom sitting here at a beautiful support level, and we suggested that this would be a very good opportunity to get into this market and trade it long, targeting this area here. Big target, I've got to say. But that's pretty much what this thing can do, because it can go from here to here to here to here to here. So it's a big mover when it actually does get into action. Now, pounds is a questionable commodity. Well, commodity is not the right word, but in context it is. It's a volatile subject, and based primarily on what I'm seeing on the charts, this is going long versus the Kiwi. Now, as I said last week, we saw an opportunity to trade it back to the bottom of the daily ascending channel, and of course now we're looking to trade in the opposite direction. So how do we do that? Very, very difficult here on the 4-hour chart right now, but here's the thing. It hasn't been able to break below that level. In fact, that level is so good that you can see that the tails of all of these candles are suggesting that it doesn't want to go below there. When that's the case, I'm thinking, all right, well, bounce point, let's try and find a long. At the moment, I don't see it because we've got a consolidation going on there. And maybe on tomorrow or Tuesday, we'll look to break out of there. But right now, the bias has to be, from my point of view, long. And we'll be looking to trade that long regardless of what happens in the next little bit tomorrow. If it even ducks below here, we'll be waiting for it to come back above that level and then trade it long. Why? Because here's the dominant chart pattern. We've been here since January, right? This is the year in the life of pound Kiwi. So we're continuing that theme. Yes, I can see the tweezer top here. Yes, I can see the lower high. That's what we traded, right? Down to the bottom. So we're now looking for that in reverse. Keep that in your mind and look for it upside down, and we could go somewhere this week. Now, Euro Kiwi, I'm already in this trade, but I'm expecting this to actually take me out. We haven't even taken profit here because we just got triggered in. I was anticipating a breakout here, right? But that hasn't worked yet. I'm not sure what happened to the euro late on Friday because I wasn't in front of the charts, but something happened and it kind of reversed quickly. But now it's in the ballpark. I'm actually expecting to be taken out of this trade, but if we're not, happy days. I would like to see now another higher low, and I would trade this long again. The reason for that is kind of multi-leveled, not least of which, similar to pound Kiwi, we've come off the bottom of that longer term channel and we're looking for a bounce. And we've got a partial bounce right now, but it's just in that awkward zone. And maybe we've picked this up just a little bit too early. But I'll be looking for, if it does take us out, I'll be looking for a higher low again to trade it long. That's Euro Kiwi. Euro dollar is another interesting one. And I think we suggested last week at this time that this was headed for this level here, around about the 119.50 mark. It may even have a little bit more in it, euro dollar. The dollar, of course, Lloyd was looking at the dollar index just now and finding it difficult to read, as I do. I think right now we're on the precipice of another decline in the US dollar, but it's only to come to a point. Now, if you relate euro dollar to the dollar index, which is pretty much the word escapes me, but it's pretty much it's not there. a representative, if you like, of the dollar index. So what I'm considering here is we get a bounce off this level, we come down to this level, and then we go again. That's interesting in terms of what the US dollar index is doing at the moment. So I 100% agree with Lloyd that it's very, very difficult to read, but we are at a resistance level. I expect it to go to support, which probably this level here, and then go again. So I'm thinking maybe a little bit of a rally in the dollar index and then a decline as the euro dollar breaks through this level. And I'm expecting that to happen. If it doesn't, then obviously we trade the range and we look for the low. We look for the short, sorry. So it's time to pay attention really on euro dollar. It's not time to act. It's time to pay attention and see what happens at this level. Same could be said for Aussie dollar, which is my last one for the day. Now, I actually love this scenario. This is perfect for me. And the reason it is, if you look at the chart here on the daily, you're seeing a very clear, probably clearer on the week. No, it's clearer on the daily, I think, that we've got probably Ash's favorite chart pattern, which is a left shoulder, head, right shoulder. We've also got a neckline through here, here, and here. And we've had a break of that. We actually traded that as a breakout of the neckline, expecting that we would get a retest and would be able to scale back into that. That was a break-even trade, but you can see what's happened since. We've just gone nowhere, absolutely nowhere, which is perfect for us, because what it's telling us is that we've now got a separate pattern that is an ascending channel, and it's reacting off that beautifully, absolutely perfectly. But go back to the bigger picture, thinking that we've got left shoulder, head, right shoulder. This should have broken down as a head and shoulder pattern, right? So in other words, high, bearish engulfing bar, lower high, which really is what a head and shoulders is, but it hasn't done that. It's been unable to break through this really neckline pattern, and certainly the consolidation area that we're in. So if it's not doing that, what's it doing? And that's the question I always ask myself. If it's not going short when it should, then what's going to happen next? So I'm really conscious that if I get to the bottom of this range, which is exactly where we are right now on Aussie US dollar, maybe we're going long. If we're not going short, we're going long. And even if we can get in here and trade it up to the monthly pivot and get some profit in the bank, so making it a free trade, that's exactly what we look to do each and every day of the week. So we're coming off the bottom of this range. You might even think that we've got an inverted head and shoulders here. This is prime territory. And if I was in front of the charts on Friday, I probably would have considered trading long right there with my stop loss under here. I'll certainly have a look at that tomorrow on the daily chart and see if there's an entry available. But it's very, very tight because we've got the pivots very, very close together and containing price as we speak. So I'm going to have to find a way, not on the daily chart, but on the smaller time frames, to get into this long somewhere. Again, that bar's interesting. I'll see if there's no gap tomorrow, or maybe if there's a gap down, I might even look to trade that bar, that 4-hour bar from Friday, the second 4-hour bar, maybe even the second, third, yeah, the second one, second 4-hour bar, that big reversal bar there off the weekly pivot. I think that's eminently tradable. And if there's no big gap in the market in the morning, I'll probably have a look at that. So that's pretty much where I'm at. And that for this week is my 2 cents worth.
Cheers, mate. Thank you very much for the technicians' 2 cents worth, and to the team for their efforts today. Going to be an interesting week in the market. Lots of stuff to go back and have a look at on the tapes, be it the macro stuff, the fundamentals with Alexis, the market data with Ash. Whether interested in gold or oil with Ainslie, Shukri on the cryptos, Lloyd on the relative currency strength, or Geoff on the technicals. Plenty to go through and have a look at as you prepare for your trading week ahead. To the team, thank you very much for your input, and for those that have joined us today. And those that watch the videos over the coming days, thanks for your support. We'll talk to you guys again soon. Thanks, everybody. Have a good trading week. Remember, take care, stay calm, make good decisions.